Hey, what's up everybody? My name is Vivian. I am the business software coach. If you're new here, please subscribe to my channels and hit the notifications bell. Every week, I will upload one video. You will learn more about business software related topic. Okay, let's get started on our topic for today on finished goods inventory, calculation, and formula. In this video, we will explain what finished goods inventory is, how is it calculated, and the activities that will cause a finished goods inventory to increase or decrease with example. So, what is finished goods inventory? Finished goods are the items that you have in inventory that are ready to be sold. The manufacturing process and the production process is complete, and the items are complete. The finished goods inventory is the amount of stock a company has to fulfill orders, ship to customers, and send to the wholesale outlet. In accounting records, finished goods inventory is considered as an asset item in the company's book. Let's take an example of a craft store. As the owner, you order craft supplies to stock your inventory, and you also order many of the same supplies to create products that consumer can purchase as a completed item from the store. Most recently, you started crocheting scarves that you will sell in your store. You find that some of your customers don't know how to crochet, or they don't have time to make their own scarf, but they love having a handmade scarf to wear or give as a gift. It is time to place your order, and you decide to buy 100 skein or packages of yarn at $1 per skein. You intend to put 80 skein in inventory out in the store for customers to purchase. These 80 skeins of yarn are considered finished goods, and they are ready to be sold as is. The other 20 skein will be kept for the scarf you will crochet. These skeins are considered supplies because they must be produced into another product. They are not finished goods until they are ready to be sold after you have completed the manufacturing process and crocheted the yarn into scarf. There are 3 steps to calculating finished goods inventory. The formula will look like this. Finished goods inventory equal to previous finished goods inventory plus inventory purchases minus inventory deductions. To find the elements of the formula, the following information will need to be determined. First, you need to identify the finished goods amount from the previous accounting period. If you update your books every month, you will take the finished goods inventory from the end of the previous month. In our example, let's say you had 4,135 in inventory at the end of the previous month. Number 2, add in the total purchase of finished goods purchased in the current month. The total of the invoices or orders you have received for inventory throughout the month is the total purchase of finished goods. For instance, you have ordered $500 in inventory during the month. You will add in $500. Number 3, subtract the amount of finished goods inventory that was sold or no longer available for sales. During the month, you sold $2,000 in inventory. Unfortunately, you have $50 of inventory stolen during the month. You also have $25 in broken items and returns $100 in inventories to supplier. The amount that will be subtracted is $2,175. The total of all the items that are no longer available for inventory. The remaining amount is the amount of finished goods inventory you have available for sales. which is finished good inventory equal to previous finished good inventory plus inventory purchases minus inventory deductions. Finished good inventory equal to 4,175 plus $500 minus 2,175. Your finished goods inventory equal to 2,500. So you have 2,500 in inventory available to sell to your customers. So what is the lesson summary for today? Finished goods inventory is the amount of products a business has available for sales. The amount of finished goods inventory is decreased when items are sold, stolen, broken, or damaged, or returned to the supplier. The total of the finished goods inventory is increased when inventory is purchased and new items are received for sales. Take the assessment in the link below to see if you can achieve the understanding of finished goods inventory calculations and formula. As always, if you learn something new in my video, please give me a thumbs up and don't forget to subscribe to my channel and turn on the notification bell. My name is Vivian. I am a business software coach and I see you in my next video.